Hi, welcome back to the channel everyone. In this video, I'll provide an overview of my general investment account for December and for 2024 as a whole. I'll also compare the performance of my portfolio with major market indexes and share my strategy going into 2025. At the end of 2024, my total account value was 120,400. Now I hold 30 assets. The Big Tech pie is my largest investment pie and has given me a return of 50.5%. Probably my only regret is that I didn't invest more in tech and set the limit of this pie to 25k. In any case, I've now made it public on Trading 212, so feel free to check it out. Here is a breakdown of my 30 assets. This is down from 56 at the beginning of the year, resulting in a more focused list. Apart from the Nasdaq 100, Google and Microsoft, which I already have larger positions in, I'm keeping an eye on stocks like Amazon, Nvidia, Meta, Visa, MasterCard, S&P Global, and potentially Costco and Booking. I'll look for reasonable entry points based on my fundamental analysis. In December, I sold some of my positions with smaller sizes like AbbVie, Eli Lilly, Home Depot, BlackRock, and Coinbase. I also added to positions like the Nasdaq 100, Comcast, and ASML. I've developed a Python script to monitor and analyze stocks, which has made my fundamental analysis much more efficient. For example, here is a comparison between AMD, ASML, and Nvidia, and I can run this on demand. So I use metrics across categories like valuation, financial health and liquidity, profitability and efficiency, and growth and dividend. These metrics form the foundation of my analysis. I also consider analyst consensus and 12-month forecasts to get a broader perspective. I'll continue refining this tool and may share the code in the future as well. Okay, now let's talk about performance. My money-weighted rate of return for 2024 was around 15%, with a monthly rate of return of about 1% for December. I also compared how my stocks and ETFs performed against major market indexes using a method called Long-Nichols PME, Public Market Equivalent, also called ICM or Index Comparison Method. This method lets you fairly compare your portfolio to an index or ETF by using the same cash flows. It provides a fair comparison because otherwise you're comparing your rate of return with market's annual return, which only considers start and end prices. This method assumes that with each cash in, the same amount is used to buy the index, and with each cash out, the same amount is sold from the index or the ETF that you're using. I've shared a post on X on how to calculate this for yourself, and I'll add a link in the description below. While the indexes assume a simple buy and hold strategy, Long-Nichols PME gives you a more accurate way to see if your stock picking actually outperformed the market. One important note here, I excluded my money market ETF from these calculations. The reason is I treat my cash there like a high yield savings account rather than trading capital. This exclusion ensures my comparison is solely based on the performance of my stocks and ETFs. So the question is, did I beat the market? And the answer is yes and no.
What? Bro, what are you talking about, man?
Well, that depends on which index you compare it to. Since I hold global stocks like Alibaba and ASML, I compared my performance to the Vanguard FTSE All-World VWRP ETF. But since most people think of the S&P 500 as the benchmark, I included that one too, along with the Nasdaq 100 ETF XNAG for a broader view. So, the money-weighted rate of return of the stocks and ETFs portion of my portfolio for 2024, highlighted in dark green, was 25.13%. Using the Long-Nichols PME method, the return of the Vanguard FTSE All-World VWRP was 21.96%, meaning my portfolio outperformed it by about 3%. The return of the Vanguard S&P 500 VWAG was 30.37%, meaning my portfolio underperformed it by around 5%. Nasdaq 100 ETF also had a rate of return of 32.13%. You can also see the total return of the ETFs, which is simply their annual return for 2024, including both price appreciation and reinvested dividends. I'm having a bit of fun trading individual stocks, so I'm happy with this performance. I did a massive rebalancing this year, improved my trading strategy, and let's be honest, the market had a strong run, largely driven by a small number of tech stocks. Going into 2025, I plan to reduce the number of trades and focus on quality stocks. I'll spend more time on fundamental analysis, share the metrics I use, and we'll see where that gets us by the end of the year. As always, here's a quick snapshot of my monthly returns and total cash contributions. This month, I added 1100 to the portfolio, bringing my total deposit to 109,700. This means that in 2024, I deposited 70,800, with 14,800 going into my stocks and ETFs, and the remaining 56,000 going straight from my bank savings into the money market ETF CSH2. My net return for December was 1,200, and for the year it was £10,700, with a total portfolio rate of return of 14.88%. As I mentioned, the monthly rate of return for December was 1%. And that's it for this video. Let me know your thoughts in the comments below. Thanks for watching. Don't forget to subscribe, and I'll see you in the next video.